It's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about moving average lines. If you guys are just getting started with swing trading in the market, this is going to be an easy guide that you guys can use to determine if you should buy your position by looking at moving average lines. So I hope you guys all enjoy this. If you guys do, hit that like button and subscribe. If you guys are new to the channel and you're like, who is this random guy? My name is Carter. I'm a full-time swing trader in the stock market, and I have been for over 6 years. And with that being said, we do have an amazing community where I teach people my strategies, my mindset. It's a one-stop shop for all of your trading needs. It's our amazing school called the Swing Trading Masterclass. You know, we have private live streams, we got a group chat, we got quizzes, lectures, everything. If you want to take trading to that next level, check it out. It's an 8-week course. I don't believe in alerts. I don't believe in getting rich quick. It's a career. It's a job. You got to treat it like one. And don't forget, you guys can use code YouTube to get 20% off. So check it out down below. 5 spots left for that code. I'll see you guys in there, and let's dive into this here. So this is a stock here that we recently traded here. This is ticker symbol AVGO. Now, looking at the hourly chart, you guys can see just the volatility through this stock here. One thing I want to do is go to the daily and start breaking down moving average lines. So you guys will notice that we have two moving average lines up. We have the blue and we have the red. So the blue is the 90-day moving average line, and the red is the 200-day moving average line. The main difference between the 90 and the 200 is strength levels. So what that means is the 200 is going to have a harder support, harder resistance than the 90. A lot of hedge funds, a lot of analysts look at the 200 to determine if they should buy this position. Now, if we look back at previous history here with the stock here, you guys can see that it's used the 90 or the blue in the past as support, right? Hits it, buying pressure, hits it, buying pressure. So now looking at it, right, you can see that the red or the blue brings a good amount of opportunity. If you bought here on the moving average line, it historically represents an undervalued point for the stock. Now, considering the 200 is just going to be the harder support. So if I could buy a position on the 200, I would every single time, just because it's a more undervalued point for the stock. So when the stock is above it, like it is up here where it's trading above the moving average lines, they act as support. Compared to when the stock falls below it, you can see where it hits it and we have some sell-off. It represents a lot more resistance rather than support. You can even see it in here where it sells off below it, acts as resistance, just has a harder time breaking above it. Now, looking at this here, so to determine if you should buy the stock here, I definitely think that you need to look at different time frames with moving average lines. So for me, I will look at the hourly. So the hourly here is very, very, very important, because what you want to look for is you want to look for some sort of breakout on the moving average line or something called a golden cross. So a breakout is where pretty much just that, where the stock breaks up through the 90 or 50 or 200-day moving average line. Historically, when a stock does that, it does represent a good opportunity to enter the position. You can see right in here where it breaks up above it, confirms the 90 as support, starts rallying its way up. We also had this where we had the blue line, the blue moving average line, so the 90, break up through the 200. This is what we call a golden cross. Some traders and analysts and hedge funds will enter on this position here where we have that golden cross, because if we look back, that does represent a good opportunity to enter the position. So now looking at this here is, okay, going through your checklist here to determine if you should buy the position. Stock on an upward trend, sold off down to a moving average line. Is that it? No, you want to go to a lower time frame, looking for some sort of support, some sort of breakout. Another thing that I look at here is I go back to the daily and I look at the RSI. The RSI is the relative strength index. It pretty much tracks momentum in the company. You want to make sure the last time, or wherever you're buying the stock, you want to make sure the last time it was trading for that price or for that, indicator. So right here is trading for a 32. The last time it was trading for a 32, we want to go back and look at. And it was all the way back in here in mid 2022 where the stock went from $41 to about $50 in about in about a month span. So you know that that does represent an undervalued point for the stock. So going through the moving average lines, the higher up you go, so if you have like the 250 moving average line or 300 or whatever it is, that is going to be a harder support, a harder resistance. Now, the lower you go, so the 50 is going to be a harder support than the 200. For me, I use the 90 and the 200. Those are my bread and butter with trading. I don't like to overcomplicate it, but yeah, that's pretty much a very, very easy thing that you guys can do as traders to determine if you should buy the position is just enter on moving average lines, look at lower time frames, and go from there. So guys, I hope you guys all enjoyed this. If you guys did, hit that like button and subscribe, and we'll see you guys in the next one. Hope you guys have an amazing rest of your day, and don't forget code YouTube 20% off, and I'll see you guys in there. Take care.